Hello, hi, and welcome to the market update from 13th of January to 17th of January 2025. So let's start with the world economy. UK came out with their CPI inflation data, in which the CPI inflation came at a number of 2.5% in the month of December. This was a dip from the previous month of November from 2.6%. The core inflation number has rose to 3.2% on year-on-year basis, and this was down from 3.5% in the month of November. So the inflation number on the UK side seemed to be in control, even though the number that they would be looking at is sub 2%, but definitely 2.5 is working for them as of now. But there are some chances that with the increase in the global oil prices, oil and fuel prices, there might be an uptick in the coming months that would be happening in the inflation number. The important discussion and the important point that was to look at the US inflation data. The US also came out there with their CPI number, which rose to 2.9% in the month of December, which, as compared to the last month, was an uptick from November's 2.9%, 2.7%, sorry, 2.7% rate. On a monthly basis, the CPI rose 0.4% in the month of December compared to 0.3% in the month of November. So this also the core CPI number rose to 2.6% on an annual basis as compared to 0.2% on monthly basis, compared with the 0.3% in the month of November. The US also came out with the jobless claim data for the week ending January 11th. That was the previous week. The new applications for unemployment has increased during this week to 2,17,000, which was up from 2,03,000 in the prior week and above consensus estimate. Although the 4-week average of the claim dropped modestly. So overall, the scenario in the US is that the inflation is quite sticky at the moment. Though it has come down from the earlier levels, again combined with the jobless claim data, it shows that the economy is on a very strong footing as of now. So this would have an impact that we would have a going forward in the year, we would have lesser number of rate cuts. So that was a very important point to look at when we started this year. That how many rate cuts would Fed be looking into? So the last rate cut that happened in the month of December, this month rate cut, everyone is expecting that Fed would not cut any rates in this. So the overall impact on all the data points is can be seen as, the first is we'll discuss is the US 10-year Treasury bond yield. The 10-year Treasury bond yield, which was hovering close to 5%. Last week somewhere in the range of 4.84, now has this week closed at 4.63. Even though the bond yield has come down by 0.2 points, 0.2 percentage points, but definitely any yield above 4.5 is a symbol of danger for the equity markets as of now. Following the US 10 dollar index, it also came down from the rising up to 110 levels. It's now trading at 109.405 in the which is close last week. In the surprise move, there has been an increase in the crude oil prices. Brent crude oil was trading at $80.73 a barrel, which was up by 1.18% from the last week. So since last week we started noting that the oil prices are also started increasing in the world market. So this would again add to the inflationary pressure on all the economies in the world, including our country. India. Gold prices, which have been largely stable for a lot of time at 78,000 rupees per 10 gram, has moved up a bit at 0.79% by 79% and closed at 79,019 rupees per 10 gram of gold. So overall, when we look at the markets, the US market in the last week closed on a upward side, where the Dow Jones and Nasdaq was up by 2% to 3%. After in the previous week, a week before this, there was a kind of a crash happening in the US market, which now had come up. The European market was also up by 3%, 3 to 7%. Asian market, again, the gift nifty, since considering all the factors that we have been seeing, we discussed earlier that the higher bond prices at above 4.5%, the dollar index above at 109, the higher oil crude prices, and of course the gold prices. Definitely put on pressure on the Asian equities, and we could see that the gift nifty was negative by 8% again in the last week. Nikkei was down by 2%. The Shanghai Composite was up by 2.3%. So overall, a mixed reaction from the Asian market, but definitely a lot of pressure on the equities of these economies. So India also came out with the CPI inflation number. There were some good facts to know that the CPI inflation moderated to 5.2% from 5.5% in the month of November. Of course, the target, it is below the target of the RBI, but this was helped by the food and beverage inflation, which came down and helped in cooling of this number at 7.7% as compared to 8.2%. So this food and beverage inflation was a number that we all were looking into, because from last few months, the food and beverage inflation was peaking out, was at a level that was unbearable for the economy to maintain, and we were looking at the new vegetable crops, and in this month, and that number has started to cool off. So that remains a good sign for the inflation side. Core inflation remains subdued, staying below at 4% mark. Fuel and light remain disinflationary at minus 1.4% YOY. So let's look at how the FIIs reacted. What was the FII and DII selling throughout the week? The FIIs were major seller again in the market, with selling of 25,218 crores worth of Indian equity. DIIs, on the contrary, bought 25,151 crore worth of equity. If we So overall, I think I have written this monthly number wrong here, which I was supposed to correct. So let's skip that number. We have the weekly numbers with us, so that we have already discussed. The market impact of all the events that has happened was the Sensex was down by close to 1%. Nifty Bank was down by 0.4 to 0.5%. Nifty mid cap and small cap remained largely stable. I would say close to they didn't show much correction this time. So there was a larger correction that has happened in the previous week. On the valuation front, when we look at Nifty 50 PE trailing had reached 21.4, which is below 2 years and 5 years average. Nifty mid cap 150 trailing PE is at 41.3, close to 2 years and 5 years high. Nifty small cap 100 trailing PE is at 32.6, close to 2 years and above 5 years average. Overall, the valuation zone, we look at the earnings period is still on, and we are looking at how the numbers are coming to, but the numbers still appears to be quite flattish as of now. But let's see. But there are some positive commentaries coming out from a lot of companies out there. So on the Buffett indicator, when we look at the GDP, which is the total market cap to the GDP, it is still modestly overvalued when we talk in the context of the Indian markets. The Indian bond markets, the Indian bond 10-year government bond yields traded at 6.885% of yield. And definitely, the event to look forward would be how the budget would define the further state of action, and the RBI on would it support the growth in the economy, or would it support the falling currency, that is the rupee, as compared to the